Hello and welcome to a special show on ET Now. The banking sector scoreboard this quarter tells a tale of contrasts. Some lenders are stepping on the gas, others are slamming the brakes. Advances and deposits are growing at a steady clip, but shrinking margins, rising provisions, and sticky slippages are clouding the picture. And a new trend is emerging: rising stress in the microfinance segment. Are these just passing speed bumps or early signs of a deeper trouble ahead? Let's decode the numbers and the narrative, and I have with me a whole host of experts. We are joined by Tamal Bandyopadhyay and Dhananjay Sinha to discuss these Q1 numbers. But I'll come to you, gentlemen. Before that, let's go across to our colleague Varun, who's giving a roundup of how the quarter has been so far for both PSU as well as private banks.
Definitely. So it's been a very interesting quarter for the overall banking sector, wherein if you see the overall report card of the banking sector, it has been mixed, wherein the overall credit growth has been low, the deposit growth has been low, also there has been increasing NPAs, the names have contracted this quarter, and also increasing provision and slippages has been a story of majority of the private banks this quarter. But more than this, every bank had its own story. So let me start with the overall private banking sector, wherein if you look at the big banks, the overall growth has now come to around single digit or around low double digit for majority of the banks. For likes of HDFC Bank, the NII growth has been around 5.4%. The profit growth has been around 12%. And for majority of the banks, if you look, there has been an overall decline in net interest margin to the tune of around 10 to 30 basis points. Also, if you look at the overall gross NPA numbers, there has been an increase in the overall gross NPA numbers. That means the overall asset quality for private banks have deteriorated to the tune of 10 to 30 basis points. Also, the provisioning and slippages for majority of the banks, for a majority of the private banks, have gone up. No doubt, HDFC Bank had its own story of floating provision. Axis Bank had its own story of technical, adjustment that they have done. Other than that, if you look at the overall commentary of these banks, majority of the commentary of these banks was subdued. For example, HDFC Bank highlighted about the stress in the MSME segment. Kotak Mahindra Bank, they highlighted the stress in the microfinance segment and also the CV space, which has actually impacted the overall net interest margins for this bank. Now, if you come at some of the small banks like Bandhan and RBL, over there, the loans and advances, they have grown in single digit. Although the deposit growth has been better than what you have seen in some of the big banks. But yes, the profit have declined from around 46 to 65%, and also the net NPA have gone up, provisioning has gone up, and slippages have also gone up for these banks. Also, if you look at for banks like Small Finance Bank, AU Small Finance Bank, the overall growth had actually come down. Now, if you come to PSU banks, the overall growth for PSU banks have been better than what you have seen in private banks. For example, the loan growth, the deposit growth, they have been in double digit, although they have been in low double digit, but yes, there's a double digit growth which they have actually, given in this quarter. The overall net interest margin for these banks have declined less than compared to private bank, and also the asset quality deterioration has been less than what we have seen in majority of the private banks. So it has been a private versus PSU, wherein majority of the PSU banks have outperformed the private banks. And let me tell you one thing, that every bank had its own story, especially on the private banking side.
Yes, definitely. Thanks, Varun, for that roundup. And there are many stories if you talk about the banking sector results, because on one side, one bank is declaring that MSME stress is there. And on another side, for example, IDFC First Bank, they are saying there is no stress on MSME. But to decode what is the real answer, I have with me Tamal Bandyopadhyay. Tamal, hi. First thing first, where is the stress you are seeing in the banking sector? Because each bank is telling their own story. I gave example of IDFC First Bank where they are saying there is no MSME stress, while if you see in Axis Bank and other banks, they have said that yes, MSME there is a stress.
Well, I think your colleague summed up pretty well. Each bank has its own story, and that's the one liner. And second part of what he has said is this: comparatively, public sector banks have done better than their private counterparts. That's the thing. Other part is I'm not very sure because I don't know how to be diplomatic. I think we need to see and we need to believe and disbelieve certain numbers, and so it's wait and watch because. Again, I'm not casting any aspersion, but in the same segment, if one particular entity says that everything is fine and others, many others say no, everything is not fine, then we need to figure out then which means the business model of all the others are not that good, and that particular entity which is not finding any problem, it's everything is fine with them, or it's the other way. We are not telling what exactly is happening. So it's your guess is as good as mine. I think we need to wait and watch, but for the past few quarters, we have been flagging off issues that things are. I mean, banking sector is holding on. Everything is fine. There is resilience in the balance sheet, and but that's the but part is this. There are slippages. There is certain pockets where not so happy scenario. I think it's now playing out. But we don't get to see much because you see, particularly for the private sector bank in the certain segment, personal loan, etc., because the NIM is so high, they can afford to write off very fast, which other banks like public sector banks can hold on. So what we see on the quality of assets actually don't give us the exact scenario. Probably it could happen is this bank A or bank B. There are certain issues are there, but they are pretty fast in cleaning up. They can afford to do because their margin is so high. So I think we need to read between the lines and we need to keep a close watch how things unfold.
All right, we also have with us Dhananjay Sinha joining in. Dhananjay, hi, we were discussing about stress in the banking sector, and there's a different story of banks. That is the bottom line which we are discussing. While on one side, MSME, there is a debate, but MFIs, we have seen many banks who have actually declared that MFI is something which they are watching. We have Kotak, we have also seen in IndusInd Bank case and other banks, they have said MFI stress is building. So what is your sense on this problem per se, on stress building in the banking sector and any other sector other than MFI you are watching?
So I think if you look at the banking sector over the last, I would say 4 or 5 years, we haven't seen that kind of growth as far as the corporate lending is concerned. And that is largely because the corporate sector has seen a significant improvement in balance sheet situation, EBITDA expansion, cash flow situation, all those things have happened. So that part is kind of fairly safe, I would say. And if you look at the current scenario, also the growth is very limited. So I think that part is not a big bother for the banking system. I think the major kind of growth that has happened is largely led by the retail lending, and I would say that there was a considerable amount of buoyancy in the uncollateralized lending that was happening, and RBI was kind of bothered about it, and they had taken some tightening actions till 2023, I think somewhere around November 23. From there on, I would say they sort of started to tighten as there was exuberant retail lending. I would say that part is something that we need to be watchful about, because what I am concerned about is the leverage that households have actually taken. And this is happening across regions, including metropolitans, urban areas, and semi-urban and rural as well. And we have seen in rural areas also the lending growth on the retail side, if you look at the annual data, looks like growing at 18%, much higher than the economic activities-led lending in the rural areas as well. So that part needs to be looked at. As far as the MSME and the micro the MFIs are concerned, there I would say that problem has been there for quite some time. It's been for several quarters now, and I think it is engulfing more and more better quality banks as well. So I think the results that we are seeing has seen that part accentuating. As far as MSMEs is concerned, a lot of these banks, if even if you look at ICICI Bank or HDFC Bank and the top-notch banks, if you look at that, they have been growing on business banking, and that is the portion that has been growing more rapidly on a systemic basis. than other parts. So I think that part we'll need to really look at, and we have to really see why there has been a considerable slackening in the overall corporate lending while the MSME is actually rising. So this is kind of very counterintuitive. Our sense is that this could be because of a tightening cash flow situation that might be happening because larger companies are conserving cash flows, etc. So we need to really look at that. So I think that can be the next level of monitorable that one needs to look at it. Overall, I would say that banking sector lending growth has slowed quite considerably. Incrementally, if you look at the lending that banks have done at a systemic level, is at least 30% lesser than what they did a year back. So I think when a slowdown happens, there is a sort of inverse relationship between the NPA ratios or the credit cost versus lending growth. It looks like despite the fact that RBI has eased the monetary policy rates and eased liquidity infusion is very high. Lending growth has not really taken off. So my sense is that banks might actually see NPA ratios rising. We are seeing that in the results in the current quarter. It could actually increase going forward. We'll need to be mindful of that. I think the other aspect is that because of the low demand for credit and the fact that RBI has cut rates quite significantly, infused liquidity, the margin pressure for the banking sector might actually continue. I see that a lot of banks are struggling with that.
Definitely. So margin pressure are going to be there in coming quarter as well. But Mr. Tamal, this is Varun this side. Just wanted to understand, because it was a year ago that we heard that the overall pain in the microfinance segment would be for 2 quarters. After 2 quarters, we heard that yes, it's going to be for more 2 quarters. But now if you look at some of the commentary of some of the banks, they are now saying that might be for the whole FY26, you will see the overall pain in MFI segment. So when is this segment actually expected to rebound and come out of the overall stress that the segment is seeing? Is it going to be 2 quarters, a year, or it will take more long than that?
Varun, I wish I had the answer. But this MFI problem or crisis, quote unquote, whatever you call it, has actually entered a new phase at this point of time. Till recently, we are talking about the stress in assets. But now what is happening is that there is a liquidity crunch. If my understanding is correct, definitely I would not name the entities, but there are a few instances of smaller MFIs. They have already defaulted in paying their bank, paying back to their banks, and this will increase because most of the banks have closed the tap. They're not giving money to the MFIs. That's the problem. Now, if I'm an MFI, I largely depend on the bank money, and if the bank stop giving me money, then what happens? What happens is this: I focus on recovery, and that the recovered money, if it's not that much, I cannot build my book, I cannot expand my book, and the moment the bank close the tap, I'm in a sort of mess. So not every MFI can withstand this kind of pressure. It's a new pressure. On the positive side, things are looking up. If you see that the quality of assets, the so-called PAR 1 to 30, 30 to 60, where the people are ability to pay, they are not paying, etc. It's actually getting better. A quick number I have on my table, like for instance, PAR 1 to 30, people are not servicing their loan up to 30 days, which was 2.1% in September 2024. Now it has come down to 1.6%. Similarly, PAR 31 to 60, which was 1.5% in December, now has come down to 1.1%. PAR 61 to 90, which was 1.6% in December, now it has come down to 1.3%. But on the longer side, if you see 180 days PAR, where people have not paid 6 months or more, it continues to be high because they're the historic portfolio those guys are keeping in their books. It could be as old as during the COVID period it happened, even before that. And these are all been provided for, so not to worry on that. I don't know why everybody has not written up, but the credit bureau data continue to have that. So the good part is this: the quality of assets is getting better. not in absolute great health, but is getting better. Second part is this, they are more circumspect. The association to association, they are putting up guardrail every second day. They are tightening the norms. So the MFI industries are not giving loan to more than 3 entities, not beyond 2 lakh. All these issues are taken care of. But if the banks do not open the tap, then I think there is some serious issues we might see. We might see more defaults.
Definitely.
And things can get messier.
Definitely, Tamal. A valid point raised here, but these are just one part of the many questions which we are asking Varun. It's time to take a very quick break, but after the break, we'll address, is PSU banks having a better party than private banks? Also, what is the scenario for advances and deposit growth? Is it in line or below expectations? We'll all discuss about it after the break.
Welcome back to ET Now Insights. We are having a discussion on how have been this quarter for the overall banking sector. And let's go ahead. And one more question is Ankur, that how has this quarter been for private banks versus the PSU banks? Because there is a debate that PSU banks have actually outperformed the private bank. Let's ask Mr. Sinha. Mr. Sinha, what are your thoughts when it comes to a comparison between the private banks and PSU banks? Have PSU banks actually done better than the private banks, or the pain is yet to come to the PSU banks in coming quarter?
So I think the overall banking system hasn't grown much, and I think there has been a slowdown that's been happening. And I think there has been a good amount of deceleration that is happening also for the PSU banks. So if you look at it, a lot of infra spending that was happening from a government side, and there was good amount of sanctions that were happening for project lending and all. And there has been a slowdown, and I get a sense that there has been a sort of slackening in the cash flow around those projects as well. So I think the growth slowdown is there for the PSU banks as well. I would say that, with respect to the credit to deposit ratio, they are at a much lower level compared to the private sector banks. They would be in the region of roughly about 74-75%. I would say, hence the moderation in the CD ratio that is required for the normalization of the banking system is somewhat lesser for them. But I think the important thing for the PSU banks is to understand that in the last cycle they had benefited a lot by way of write back of provisioning, and that translated into a one-off expansion in their profits because of those variables. I think that is coming off as a result of that.
All right, Mr. Sinha, due to paucity of time, we have to continue this discussion in other time, and actually results are continuing, and so will our discussion will continue on banking sector. Thank you so much, Mr. Sinha and Mr. Tamal Bandyopadhyay, for joining us on ET Now Insights.
The larger corporates are quite liquid, highly rated, and pretty strong on their balance sheet, which means the yield that one could get from that is lower. And we have seen competition from certain segments of the financial system where the rates are pretty low. They offer very low rates. And so consequently, while we like the quality, we have been selective in offering and waiting for the rates, that is at least the rates that the banks are offering to larger corporates to be stable.
We have got various segments which you have to meet the PSL requirement, and one of them is the small and marginal farmers. And we try to, whatever meets our credit thresholds, we are happy to lend. I mean, so that is essentially what we look at. I think it's the first and most important thing is to ensure that the credit thresholds are irrespective of segment. So I would like to just make a distinction between that approach. And rural, there has been a bit of a slowdown, which includes, I think, tightening of norms from on the jewel loans.
Closer to 2 times normal GDP growth, and that's what we kind of try and peg to. That's more of a risk appetite statement to make sure that we're not taking too much risk, nor are we leaving anything off the table. And that's how we continue to think about loan growth and asset growth at Kotak.
We are watchful about how the situation is. First half is always seasonally weak, plus there are certain states going into election, and industry has shown some uptick in sequential overdue book. So let's wait and watch how things go. But I would rather be more cautious on saying that the book has maybe little bit chance of declining rather than growing.
Ajay Joshi, who is the chemical industry expert, joining us on the show. Hi Ajay, great to be speaking with you. And Ajay, just yesterday we had the Tata Chemical earnings, when while we were chatting with the management, they highlighted the fact that the UK and US deal is rather very positive for the chemical industry as a whole. And along with that, they were also mentioning that because of some of the plant shutdowns in various geographies, the outlook for the Indian chemical players is now boding very well. Help us with your view. What's really happening within the chemical space right now?
Yeah, I think what happened with Tata Chemicals, their soda ash prices remained very firm in the last quarter. That resulted in very good growth for the company overall. And company has assets in the US locally. They have a manufacturing facility in the US that also bolstered company's growth there. But again, I would remain cautious in such businesses because these are cyclical businesses. If you had competition plant shut down, that time customers would come to you. But once competition is back into the market, customers would have plenty of options. So businesses like Tata Chemical, which are in the chlor-alkali space, they are cyclical in nature. 2 or 3 quarters, they do not make money. And then suddenly on the 4th quarter, they make money. So on commodity-like businesses such as Tata Chemical, this would continue to pan out. Even current quarter would be better for them. But the next 2 quarters, we would have again supply back into the market from China and other countries. So then we would further see prices falling down. But overall, for the chemical space, the good thing that has happened is the agrochemical sector has finally bottomed out. And globally, we are seeing significant price increases in agrochemicals. Even agrochemicals coming from China, we are seeing 5 to 10% price increase in the last 2-3 weeks. So overall, very good sentiments for Indian chemical companies, both in local sales as well as in the export markets.
Absolutely, Ajay. Good morning. While agrochemical, while we talk about the fertilizer space also, very strong numbers in Q1 were reported both for fertilizer as well as agrochemical players, of course, due to the early onset and strong showing numbers. You did touch base agrochemicals, but also give your views on fertilizer and which stocks are expected to be in the upcycle, and are there any scripts which one needs to avoid?
See, fertilizer space also in the last quarter, a lot of front loading had taken place because everyone was worried what kind of tariffs India is going to get. So companies pushed a lot, even customers took upon a lot of inventory in the export market. But with the India-China tensions, fertilizer segment is now poised for good growth. We are seeing a lot of capex, lot of new manufacturing coming in the fertilizer segment in India. So companies like Coromandel, companies like Paradeep Phosphate, these would be the key beneficiary. Apart from that, Chambal Fertilizer, Rashtriya Chemical Fertilizer, these will be some good companies to keep in your radar because they are expanding, they are investing heavily into new manufacturing facilities. They are making in India for India, as well as they are targeting the export market. One particular company, Coromandel, because apart from being a fertilizer company, they are now also an agrochemical company because they have acquired NACL. So fertilizer meeting agrochemical would be a very strong cocktail because they would be giving everything to their end customers now, both agrochemicals as well as fertilizers to the farmers. So Coromandel, Paradeep Phosphate would be two very high growth companies, and this year we can see very strong business for them.
Indeed, Ajay, that's indeed is testing the patience as well. But so good having you, Ajay, on the show. Thank you so much.